So can we discuss who a sole trader is? And if possible, we can cite examples. Do I need to call someone to assist us? Prof. Frank, a sole trader. Who is a sole trader?
A sole trader is a business where one person uses all the factors of production in for the business.
Okay. So let's get some concepts well stated. A sole trader is an individual. Okay. So a sole trader is an individual. A trader is a person. Okay, somebody who does trade. An individual who manages and controls a business specifically buying and selling of goods or merchandise. So a sole trader is any individual who is managing and controlling a business, specifically buying and selling of goods or merchandise to make profit. You always need to add that, to make profit. The aim of every sole trader is to make profit. But the key words here are: a sole trader is someone who buys and sells goods or merchandise. So the main activity of a sole trader is to buy and then resell whatever he or she purchased. Okay. Now let's get the distinction between that and sole proprietorship business. Sole proprietorship. Or let me say a sole proprietor. Let's pick it from there, because we need to distinguish between a sole trader and a sole proprietor. Okay, they are two different terms, but sometimes used interchangeably. Okay, so a sole proprietor is also an individual who manages and controls a business, but the person may not necessarily be engaged in buying and selling alone. There are some sole proprietors who are into the rendering of services. Okay, so all those individuals who are into the business of rendering services, and when I say rendering services, I'm referring to these are barbering services, food services, transport services, etc. You see, these people are not buying and selling goods, tangible goods or merchandise, but they are rendering services. So for them, we'll term them as sole proprietors. So a sole trader can be or is a sole proprietor. Okay, but those who are into the rendering of services can be referred to as sole proprietors, but not sole traders, because a sole trader should be someone who buys and sells goods or merchandise. Please, is that clear?
Yes.
Okay. So when you see sole proprietorship business, then they are referring to all the individuals who are into buying and selling, rendering of services, etc. to make profit. But when they limit you to a sole trader is that individual who buys and sells goods to make profit. So I wanted you to get the distinction between the two terms, because in some books you see the final account of a sole proprietorship. Okay, elsewhere you see sole trader, but in our discourse we are paying attention to all sole proprietors, even though at certain point we have to focus on the sole traders, and at certain point we have to bring in the sole proprietors who are into the rendering of services. Okay, so now that we know who a sole trader is, we can cite examples. When we go into our markets, we have all these tomato sellers, onion sellers, bookshop owners. In fact, we even have those who are into buying and selling of cars, the car dealers. But the basis is that these businesses are run by individuals or one person, private person. Okay. Now, as financial accountant, you see, these people are here or doing business to make profits. They want to make profit. So anytime profit comes into the picture, you don't agree with me that there's going to be money issues, right? And the financial accountant is interested in monetary elements. Okay. Hence the reason why we prepare account for these sole traders. Because after all, they are going to buy. When you are buying, you use money. When you are selling, you get money. So the financial accountant is interested in the affairs of a sole trader or sole proprietors. Okay. I think you want to get something down. So let's get some of the terms that we've just spoken about. So sole proprietor. This is an individual who buys and sells goods or renders services with the aim of making profit. So that's a sole proprietor. So a sole trader is a type of a sole proprietor who is only interested in buying and selling of goods. Okay, that person does not engage in rendering of services. Okay. So now that we know this concept, let's focus on the final account of a sole proprietor. But we need to appreciate what final accounts are. Final account. What are final accounts? Let me get some views from you, and then maybe we'll build up on that, or I'll come in. So when we say final account, what comes to mind? Prof. Sandy, any idea when you hear final account?
No, please.
Oh, come on now. You should be able to tell me something. Final, like even in school, when they say final exams, it means an exam that is done, at the end of your semester or your school terms. So when you also see final accounts, at least it should sound something. Just try. I want you to try. I'll buy pizza for you.
An account that is made at the end of the period or something.
Yes, exactly. So final accounts, number one, are prepared at the end of the financial period. Okay, and in accounting, our financial period is normally 1 year, 12 months. Okay, and most of the businesses start from January to December. There are others who start from July and end then following year June, but always it should be 12 months. Okay, so let me bring in some of these things. So when we talk of final account, these are We have financial statements or accounts prepared at the end of an accounting period to determine. So there's a reason why we prepare them. To determine one, profits or losses made by a business, and also to show the financial position of the business. So final accounts, these are financial statements or accounts prepared at the end of an accounting period to determine profit and loss. So these are the key rationale behind. The first one is to determine profit or loss made by the business, and secondly, to show the financial position of the business. So these are the two main reasons why we prepare final accounts. Determine the profit or loss the business is making, or I should say, and to show the financial position of the business. I think the first one makes sense when we say to determine the profit or loss. Because if the business is set up to make profit or losses, then it makes sense to say that you need to calculate or determine the profit or loss that the business is making. And also, when we talk about showing the financial position, we are referring to bringing to bear the assets, liabilities, and capital of the business. Okay, so financial position bothers about the total assets the business has, the total liabilities, and then the capital. Okay, good. Please, any question before we move on? Any question? I think I'll give you some time to copy. If you are done, then I'll move to the next slide. Okay, so key highlight, we saw who a sole proprietor is and who a sole trader is. But we are looking at the final account of a sole proprietor. A sole proprietor. Okay. And we said sole proprietorship bothers about businesses that are into buying and selling or rendering of services, right? Okay, so there we combine all the tomato sellers, onion sellers, book sellers, shoes, clothing sellers, to those who are also rendering services like the barbers, the hairdressers, the food and restaurant and guest house services, all those people, okay, all together as sole proprietors because they are doing this business individually or alone. If it becomes two or more people, then we are talking about partnership. And I want to believe you saw some of these things in business management. Okay. So can we move on? Okay. Now that we know the reason why we prepare final accounts, okay, one, to determine profit or loss, and two, to show the financial position of the firm, let's dig into what these final accounts are. In terms of a sole proprietor, there are three of them. Three of the final account and financial statements. Three. And they are the following. The first one is called the trading account. I think Prof. Frank can assist us here. The first one is the trading account. The second one, Prof. Frank.
Profit and loss account.
The profit and loss account. Then the final one,
Balance sheet.
Is the balance sheet. Okay. So when you look at a sole proprietor, these are the three accounts we prepare for them. Okay. However, if you dissect it into those who are doing buying and selling of goods, and those who are just rendering services, then you have to be specific that the trading account is exclusive to only the sole traders. Okay, it's exclusive to the sole traders. Why am I saying that? Because the sole traders, they do buying and selling of goods. For that matter, a trading account is prepared to record the activities of the buying and selling of the goods. That is to say that we can't prepare trading account for a barber, because a barber does not buy and sell goods. A barber renders barbering services. So I want you to get those distinctions. So even though they are all sole traders, we don't prepare trading account for those that are rendering services. No. We prepare the trading account for only those that are doing buying and selling of goods, or those who are trading. And the definition for trading is buying and selling of goods. So I hope that is clear. Okay, so for those who are rendering services, normally we prepare the profit and loss account and the balance sheet for them. However, these two together, trading and profit and loss account, we can call that the income statement. The income statement. Please note that down, is very important. The income statement. Okay, and then the balance sheet is referred to as statement of financial position. Okay. So the trading profit and loss account can also be referred to as income statement, and then the balance sheet is also known as statement of financial position. So in some books, you see income statement and statement of financial position. Please don't get confused. The income statement is the same as the trading and profit and loss account. Okay. So these are the three financial statements and accounts that we need to prepare for sole traders and sole proprietors who are doing rendering of services. So our task is to pick them one by one, know why we prepare them, and also know the format for preparing each of them. So we pick the trading account. Well, Frank, you are going to assist us here because you have some knowledge or idea on this. So what is a trading account? But Prof. Alexia and Prof. Sandy, if you have also read about it and you want to share, please feel free and share with us. Trading account. You can digest the meaning of trading. Trading means buying and selling. So when we are preparing an account for buying and selling, what do you think it's all about? Prof. Sandra.
The gross profits and loss.
Okay. Frank, restate the point again.
The trading account. I don't know, but it's the calculation for the gross profits and gross loss.
Okay. Okay, so Prof. Frank is giving us some terms, gross profit and gross loss. That's good. Prof. Alexia, you want to share your opinion or any view? Okay. What of Prof. Sandra?
No, please.
In fact, I don't accept no. You have to say something, even if it's wrong. I like it, and there's nothing like wrong answers in my books. Even if it's wrong, I'll give you one mark out of the total marks. So feel free and express your views. Sometimes what you feel is wrong is even the correct thing. So Prof. Alexia and Prof. Sandy, feel free and talk to me. Anyway, so I'll pick on what Frank said. Now, the trading account simply means, now you know that trading means buying and selling of goods, right? So if you talk of trading account, then it is an account that is going to determine the profit or loss a business is making from buying and selling of goods. As simple as that. Okay, so it is prepared to determine the profit or loss that is made from buying and selling. But that profit is what Prof. Frank said. It is called gross profit. Okay, gross profit. And if it's a loss, it's gross loss. So gross profit and gross loss, these are profit and losses made from buying and selling. So the trading account is prepared to determine gross profit or gross loss. So in exams, you can say, okay, trading account is prepared to determine gross profit or gross loss, or it is prepared to calculate the profit or loss a sole proprietor is making from buying and selling of goods. Okay. Now, moving on, I want you to remember when you were in GHS, you used to calculate, what do you call it? Profit or losses from. They will say, oh, Kwame bought shoes for 120 cedis. He sold it for 150 cedis. How much profit did Kwame make? I hope you remember these problems in GHS when you are finding profit and losses. Can you tell me about it? How were you determining profit and losses? In fact, there was a simple formula you were using. Profit is equal to
I remember that profit was equal to selling price minus cost price.
Exactly. Very brilliant for that. You were using this simple formula. Profit is equal to selling price minus cost price. And so if it is a loss, then it means the cost price is more than the selling price. Yeah. Now, it is the same idea we are bringing on here. So the gross profit or the gross loss is equal to, instead of us using selling price, we are going to use what we call net sales minus, instead of using cost price, we'll say cost of sales. Okay, so we have just updated the formula you used to know, selling price minus cost price. This time we are saying net sales minus cost of sales. So the selling price has been replaced by net sales, and then cost price has been replaced by cost of sales. So in the trading account, basically what you do is you compare your net sales to your cost of sales. If the net sales is more than the cost of sales, you have a gross profit. If it is the opposite, you have a gross loss. Okay, so we are using the same idea from GHS. Profit is equal to selling price minus cost price. Okay, here. Now, another thing we have to know is what is net sales and what is cost of sales. Okay. Prof. Frank, can you assist us? What is net sales? Oh, my dear professors, you all have idea of, you know what sales is, and we have just added net. And in business, when we say net, it tells you something. Net sales. So can you share opinions on that?
It is the actual sales.
The actual sales. Okay, the actual sales. So how do you get that actual sales?
The sales returns subtracted from the total sales.
Okay, that is true. So your net sales is your total sales. Okay, that is both your cash sales and credit sales minus return inwards. Return inwards, or what we also sometimes refer to as sales returns. So when you are talking of the net sales of a business, we are looking at the total sales the business has made, be it cash sales or credit sales. We add them, and then we less return inwards, the total goods that customers have returned back to the business. That is how we get our net sales. Very simple. Very, very simple. Now, for the cost of sales, we have to go through some hurdles to get this cost of sales, okay? And I think we'll do that quickly. Let me move to the next slide as we try to digest this cost of sales. So cost of sales, first of all, is equal to cost of goods sold plus any trading expense. Okay, so when you talk of cost of sales, you are looking at the cost of goods sold. You see, the idea is that we are selling goods. So cost of goods sold means we want to know the total cost of the goods we have actually sold. And then we add on any direct trading expenses. So for example, if we are into buying and selling of shoes, cost of goods sold will mean that we want to look at the total cost of shoes that we have sold within a year or 12 months. Then we add on other expenses we had to incur because we want to sell the shoes. And those are the trading expenses. However, your cost of goods sold is also equal to something, which is cost of goods available for sale minus closing stock. I'm bringing in some of these things because sometimes objective tests, they can ask you. So pay attention to the things that we are looking at. Net sales, cost of sales, cost of goods sold. So cost of goods sold is equal to your cost of goods available minus your closing stock. Let's say in January, we had 100 shoes available to sell within the year 2024. Then at the end of the year, we have 20 shoes remaining. And that will represent the closing stock. That's the goods that you have not sold or the goods at the end of the year. So if I ask you, how many total shoes have you sold? Then you can confidently tell me that it is the 100 which was available minus the 20 which is left. And we are going to get 80. So the 80 becomes the cost of shoes that we have actually sold. So cost of goods sold is the available minus your closing stock. We'll end this session on the cost of goods available for sale. What is that too? That one too is equal to your opening stock plus purchases plus net purchases. Okay. So if you are looking at the goods you have available to sell, we are saying consider the goods you have from the previous year, which you are bringing to the next year. That's the opening stock. Then you add on the stock or the goods that you bought during the year. So for example, a clothing trader can have, let's say, 100 shirts from the previous year. So that becomes the opening stock in this year. And during the year, maybe he has to go and buy more shirts to add on. So when you combine those two, you get your cost of shares available to sell. Now, the last thing we'll look at is the net purchases. Net purchases. So like the net sales, your net purchases means your total purchases minus return outwards plus carriage inward cost. Okay. So when we come back, we'll go over some of these terms that I'm bringing on board, and then we'll try to put it in the format. Okay. So we have 1 minute to end the session. Please remember, we are dealing with the final account of sole proprietors. We have been able to distinguish between who a sole proprietor is and who a sole trader is. And the core point here is that a sole trader is also a sole proprietor, just that that person is doing buying and selling of goods. And we have other proprietors who are only rendering services. Okay, so professors, let's meet in the next session and then we'll continue.